Thinking of sending goods from your parent company in country A to your new South Korean branch? You're probably wondering about customs and tax benefits, right? That's a great question. But it's not as simple as just shipping the goods. Let's break it down. 1. Understanding the FTA Korea and the EU. First off, country A is part of the European Union. This means trade between South Korea and country A falls under the Korea-EU Free Trade Agreement, or FTA. This agreement is designed to make trade easier and cheaper by reducing or eliminating tariffs on many products. 2. The Golden Rule Rules of Origin. Now, just because your goods are coming from country, it doesn't automatically grant you those sweet customs benefits. The most crucial thing is that your product must meet the rules of origin. Defined in the Korea-EU FTA, this means the goods must truly originate from country A or the EU based on specific criteria, like where materials come from and how much value is added during processing. It's not just about where the final assembly happened. Once your goods meet these origin rules, your exporter in country A needs to issue a proof of origin. Your Korean branch, as the importer, then submits this to customs. That's how you get those preferential tariff rates, which could even be 0%. If your shipment is small, usually under 6,000 euros, a self-declaration of origin might work. But for larger shipments, your exporter often needs to be an approved exporter to issue the proof. 3. Shipping to your branch. What happens at the border? When your country A parent company ships goods to its Korean branch, it's treated just like any other import-export transaction. So no automatic customs waiver just because it's an internal transfer. You still need to follow all those FTA rules of origin and provide that proof of origin to get the customs benefits. Your Korean branch will act as the importer. When the goods arrive in Korea, the branch will be responsible for paying customs, duties, and value-added tax VAT during customs clearance. Even if you get that 0% customs duty thanks to the FTA, the 10% Korean VAT will still apply. Don't worry too much about that VAT, though. The branch pays it when importing, and then it can deduct that amount from the VAT it collects when it sells the goods in Korea. 4. Key takeaways for you. To summarize, FTA is key. The Korea-EU FTA applies to your shipments from country A. Origin is everything to get customs benefits. Your goods must meet the FTA's rules of origin, and you must have the proof of origin. Taxes. You'll pay Korea's 10% VAT on import, but this can usually be offset against sales VAT later. Branch tax. If your Korean branch makes a profit and sends it back to country A, a branch tax might apply. However, the tax treaty between Korea and country A could reduce or even eliminate this tax. It's definitely worth checking those treaty details. This can get complex quickly, so we highly recommend talking to a professional customs broker or tax accountant in Korea. They'll ensure you're compliant and getting all the benefits you're entitled to. Got any more questions about setting up your business in Korea? Let me know.